I own Bitcoin personally. I bought a lot of it. I bought $175 million worth of it
Okay.
back when it was trading in the 9,000 range.
Yeah.
And then I bought $250 million worth of it on behalf of MicroStrategy a while later in the 11,800 range. And
Wow.
then I bought another $175 million worth of it when it traded down. We doubled down in the low 10,000 range. So the MicroStrategy position ended up being 425 million at about
Amazing.
11,111 per coin, and my position ended up being 17,732 Bitcoin at 9,800 and something a coin. And I bought it because I couldn't find anything better to buy.
Yeah, yeah, I know, I know.
I was a big tech investor, and I think that in March of 2000 or 2020, I reassessed my views of big tech, and my conclusion was big tech is now a crowded trade. When Main Street shuts down and big tech doubles,
Yeah,
and the economy has a K-shaped recovery, then there's a delamination of financial assets from underlying economic activity, and that was a jarring change in reality for me. So I reassessed my view of big tech, and then I also reassessed my view of cash, because simultaneously big tech looked like a crowded trade, and the M2 monetary supply expanded by 24%, and I watched the interest rates go through the floor,
yeah,
and I watched bonds hyperinflate and the value of fixed income hyperinflated. So I saw hyperinflation of assets, no inflation of non-assets, and it caused me to reassess my investment thesis
sure.
about what would be a good store of value over the next 5 years.
Yeah,
My view is inflation as used on public media is a misnomer. There's
yeah,
a huge fixation on inflation as defined as a consumer basket of goods that do not include energy and food, the highly volatile energy and food,
yeah,
and they do not include any assets. And so if you define a market basket of non-assets without food and energy, I don't think you'll get inflation, or you'll get very de minimis inflation, because the cost of streaming Netflix and YouTube videos and highly manufactured standardized goods and services isn't going to inflate that much, because the fixed cost is high, the variable cost is low or zero. And so you could print infinite money. That's not going to inflate. What's going to inflate is assets, right? The
yeah,
cost of a bond that yields $50,000 a year cost $1 million in 2010. It cost $2 million in 2019. It cost $10 million in April of 2020. Going from 2 million to 10 million in 6 months is hyperinflation. You'll see hyperinflation in scarce, desirable assets. And that's what we're seeing right now. So I expect that if the money supply expands 15% a year for the next 5 years, you're going to see the value or the price of scarce, desirable assets are going to go up at least that much or more. And I think that you're going to see the value of manufactured consumer goods with
yeah,
low variable cost and high information content. They're not going to go up. And the Fed and the central banks, they're not going to get any inflation if you define inflation as consumer inflation. They're going to get asset inflation.
yeah,
And it's going to create this dilemma where if you're holding cash, you're going to lose half your wealth. And if you're holding fiat instruments of commercial real estate, bonds, or stocks, they're not going to store value very well, because bonds have to yield more than the monetary expansion rate, and stocks have to grow their cash flows faster than the rate of monetary expansion. And how are you going to do that? Right? It's just not like, if you were growing the money supply by 5% a year for 10 years, which is what we did in the last decade, you might be able to get ahead of a hurdle rate of 5%.
yeah,
But the hurdle rate's gone to 15%. If I triple the cost of capital, the hurdle rate, name me a bond that's going to yield risk-free 15%. Name me a risk-free equity that's going to grow its cash flows more than 15%.
yeah.
Can't find it, right?
Not possible.
Okay, and so that leads you to a mad scamper for a store of value. And if I can't find it in a fiat instrument, and I know I'm not going to find it in fiat cash, I have to find some kind of liquid, scarce asset. So this is a time where you go and you buy that beach house in Saint-Tropez because you think that everybody's going to want to go to Saint-Tropez, or maybe you buy your Picasso, or maybe you buy something very priceless. You buy the jet or the yacht that you always wanted. Yacht probably better than jet because people don't fly as much, but yachts get a lot more use nowadays. So after you get through that, where am I going to find liquid monetary energy? And the answer is Bitcoin. Bitcoin is, in essence, crypto gold, 21 million virtual gold coins. You can't make any more. It's pharmaceutical grade synthetic gold. It's an engineered safe haven long duration treasury asset, because you can't mine 2% more every year like you're doing with gold. You can't hypothecate it and issue a gold ETF that's unverified. You don't have any problem auditing it and verifying it. There's no CEO or company to regulate it or to control it. So you've got all the benefits of gold, none of the hangover of gold, none of the after effect negative problems of gold. It's harder than gold, and it's also smarter, stronger, faster than gold, because you can build it into Apple Pay or Amazon. In fact, right now it's built into PayPal and Square.
Yeah.
And PayPal and Square are selling more Bitcoin every week than the miners can possibly produce.
Yeah.
And they're going to and Square sold 1.7 billion worth of Bitcoin this quarter, up 100% quarter over quarter, 1,000% year over year. So when you start to build Bitcoin into mobile payment apps, you're going to drive huge amounts of adoption. And what is PayPal plus Bitcoin? PayPal plus Bitcoin is a mobile payment application with a savings account that yields 100% tax-free. It's been doing it for the past decade. So if I'm using PayPal and I'm sweeping my money into Bitcoin, then I've got a payment network.
Yeah.
I've got currency rails, and then my treasury account is accreting at 100% a year versus the dollar or versus the euro. So is that a good idea for PayPal? I think so. Is it a good idea for Bitcoin? I think so. PayPal's worth 250 billion. They've got 340 million users. Square's worth 90 billion. They've got 40 million users.
Yeah.
These tech companies are plugging into liquid synthetic monetary energy. And it's the only game in town. So is it a good investment? Yeah, it's basically the apex safe haven asset in a world where $250 trillion worth of money is looking for one.